in the high-stakes corridors of global finance. Today, Dubai and its sister Emirates in the UAE sit on a staggering $2.2 trillion mountain of sovereign wealth. We are talking about the Investment Corporation of Dubai, or ICD. Middle Eastern sovereign funds allocated 61% of their capital to hard assets infrastructure. This is a fundamental pivot from wealth preservation to system architecture. From controlling the world's busiest ports to anchoring $50 billion funding rounds for the future of artificial intelligence. And today we are analyzing the strategic masterclass being played by Dubai's sovereign funds. Make sure you are subscribed to Finance Uncovered and have that notification bell turned on to understand why the rules are changing. The traditional rule of sovereign wealth was simple: collect oil and gas revenue. But to de-risk massive global projects and catalyze co-investments, they are becoming the world's buyers of last resort and partners of first choice. Why? Because Dubai and Abu Dhabi have transformed data sovereignty into a new form of capital sovereignty. They understand that in the 21st century, the Investment Corporation of Dubai's mandate is a perfect case study in this new rule of investing. From Emirates Airline and Dubai to the massive banking giant Emirates NBD and the global port operator DP World, the ICD is a vertically integrated investment powerhouse. For example, when the ICD invests in a new logistics hub in Africa or Southeast Asia, it isn't just a financial play. This ecosystem investing is a sharp departure from the diversified portfolio model taught in MBA. Instead of spreading risk across thousands of unrelated stocks, Dubai is concentrating power across strategically linked industries. This strategy is particularly evident in the way Dubai is navigating the great tech decoupling between the US and China. While many global funds are paralyzed by geopolitical tension, Dubai's sovereign entities are leveraging strategic neutrality as a technological hedge. They are becoming the bridge between East and West. By mid-2025, the UAE had finalized comprehensive economic partnership agreements with countries ranging from India and South Korea to Morocco and Turkey. These aren't just trade deals. They are investment pipelines. The ICD and its counterparts are moving capital into fast-growing markets (FG) at a rate that is 14% higher than the global average for sovereign funds. They are placing bets on the next billion consumers in the global south while simultaneously anchoring the most advanced AI and semiconductor research in the north. This dual-track strategy allows them to capture the high-growth potential of emerging markets while maintaining a grip on the cutting-edge technology of developed ones. One of the most disruptive rule changes is the shift toward direct investment and control positions. For decades, sovereign wealth funds were the silent partners of the investment world. They would give $500 million to a private equity firm like Blackstone or KKR and let the Americans make the decisions. Those days are over. In 2025 and 2026, we've seen a marked uptick in Dubai-based funds, demanding board seats, voting rights, and direct oversight. They are now co-designers of the systems they fund. They are demanding better reporting, faster innovation, and a seat at the table when strategic decisions are made. This has turned the relationship between Middle Eastern capital and Western corporations on its head. It's no longer thanks for the check. It's how does this investment align with our 2030 vision for a non-oil economy? This shift has led to the creation of thousands of high-level finance jobs within the region, as these funds build out internal teams of specialists who can go toe-to-toe with any analyst on the planet. Furthermore, we are seeing the rise of national champions. Dubai's funds are acting as system architects by building world-class companies from the ground up in sectors like renewable energy, aerospace, and digital infrastructure. Look at the energy transition. While the world debates the speed of the shift away from fossil fuels, Dubai's investment vehicles are pouring billions into green hydrogen and solar technologies. They aren't just preparing for a world without oil. They're investing in the very companies that will provide the world's next energy source. This is the ultimate hedge. By owning the legacy energy assets and the future energy technology, they ensure their seat at the global power table remains permanent. This is patient capital in its truest form, investments with horizons that span decades, not fiscal quarters. But perhaps the most significant rule change is the integration of AI as sovereign infrastructure. In the early months of 2026, the UAE's dedicated AI fund, MG, and its partners have moved to integrate artificial intelligence into every layer of their sovereign portfolio. They realize that if the algorithms guiding global investments sit elsewhere, then the control over their wealth sits elsewhere too. By building their own proprietary AI models and digital infrastructure, they are ensuring algorithmic resilience. They are using AI to optimize port logistics in real time, predict global commodity shifts, and manage the risk of a $2 trillion portfolio with a precision that was impossible just 3 years ago. This technological moat is making it increasingly difficult for traditional Western funds to compete. How can a traditional asset manager compete with a fund that owns the satellites, the ports, the banks, and the AI that optimizes them all? The financial world is also watching how Dubai is redefining resilience. In the old world, resilience was measured by how much cash you had in the bank to weather a storm. In Dubai's new model, resilience is measured by the strength of your coalition capital. These funds are increasingly partnering with other sovereign funds from Singapore Temasek to Saudi Arabia SPIF to tackle massive, multi-billion-dollar infrastructure projects that are too large for any single nation to handle. These are not just transactions, they are shared responsibilities. By creating these sovereign coalitions, they are building a financial shield that is nearly impossible for market volatility to pierce. When global markets dip, these funds don't panic. They use the opportunity to buy hard assets at our discount, further consolidating their control over global supply chains. This strategic evolution is backed by a massive shift in the legal and tax landscape of the UAE. In late 2025 and early 2026, new laws regarding foreign direct investment and property ownership for non-residents came into effect, aiming to more than double total foreign investment inflows to over $65 billion by 2031. This is part of a broader plan to make Dubai a frictionless environment for capital. Why would a sovereign fund do this? But global capital provides the liquidity. As we look at the data for 2026, the results are undeniable. The Investment Corporation of Dubai and its peers are the engines of this change. They are moving away from the passive style that defined the early 2000s and into an active. The rules of the game have changed. Dubai's sovereign funds are no longer just hiring consultants, attracted by the opportunity to work on projects that have a genuine impact on global infrastructure, rather than just shuffling paper on a trading desk. This concentration of talent is creating a new center of gravity for financial intellectual property in the Dubai International Financial Center DIFC than on a trading floor in Manhattan. What we are witnessing is the institutionalization of adaptation, allowing them to chase market-beating returns in the short term while holding firm to decades-long national objectives. It is a hybrid model of capitalism that does unfit into the traditional boxes of state-owned or private sector. The Dubai model is becoming the gold standard that everyone is trying to replicate. The shift toward direct investment is only the beginning of how Dubai's sovereign funds are rewriting the rules of the financial world. We must look at the physical layer of their strategy, the infrastructure that makes global trade possible. This is a rule-breaking move because, traditionally, sovereign funds were seen as financial vultures or passive harvesters of dividends. DP World is committed to investing $2.5 billion in 2025 alone across 4 continents, to the massive deep-sea port at Banana in the Democratic Republic of Congo. By owning the physical port, the inland logistics hubs, and the digital tracking systems, and where the supply chain bottlenecks are forming weeks before the official data hits the Bloomberg terminals. In 2026, the DP World Global Trade Observatory reported that despite rising trade barriers elsewhere, they are creating their own demand by making trade more efficient in places where it was once considered too risky for Western capital, a massive portion of which came from the transportation and related services sector. They are creating a captive market for their own airline. Dubai has realized that in a world of volatile energy prices and shifting geopolitics, this total ownership model has allowed Dubai to maintain a hotel occupancy rate of over 83% in early 2026. But perhaps the most rule-breaking development of 2026 is the emergence of Dubai as the world's premier hedge fund for real estate. Dubai's sovereign funds have turned it into a high-frequency trading arena. The ICD, through its stakes in EMA properties and its own strategic real estate arms like ITRA Dubai, in a world characterized by high taxes and political instability in the West, they are creating a physical safe haven for the world's ultra-high-net-worth individuals. This brings us to the digital frontier. In early 2026, the UAE's focus shifted toward making the Dubai International Financial Center DIFC the global brain for AI-driven finance. They aren't just allowing it, they are building the legal frameworks that will define how $100 trillion of global institutional capital will interact with machine learning over the next decade. Dubai is attracting the Silicon Valley of finance. They are the core R&D centers for the future of fintech. They are creating a sandbox environment where the world's most innovative funds can test new technologies under an English law-based legal system. This has made Dubai the preferred destination for alternative assets. Whether it is tokenized real estate, carbon credits, or AI-managed hedge funds, the ICD and its partners are providing the plumbing. This is why we see a capital migration happening in real time. In 2026, the UAE sovereign wealth funds oversee nearly $3 trillion in assets. And they are using that weight to demand that global financial institutions move their decision-making power to the region. If you want a slice of that $3 trillion, you don't just send a pitch deck to Dubai. You move your top partners to a villa in Jumeirah. We must also analyze the geopolitical arbitrage being played by these funds. In early 2026, the UAE joined the Pax Silica Alliance, a strategic move that involves collaborating with the US, UK, and South Korea on semiconductor and AI infrastructure. At the same time, Dubai's funds are expanding their comprehensive economic partnership agreements, CAPAs, with the BRICS Plus nations. This is the neutrality rule. In the old financial world, you had to pick a side, the dollar system or the emerging alternative. Dubai has decided to be the system by investing heavily in Western AI data centers like the $100 billion Stargate project in collaboration with Microsoft and BlackRock, while simultaneously facilitating trade for China and India through its ports. Dubai has made itself too connected to fail. They have turned their geographic location into a financial shield. If either side pulls the plug on Dubai, they pull the plug on their own supply chains. This strategic neutrality is further bolstered by the UAE's move into hard commodity sovereignty. Through the ICD's ownership of Amarat's Global Aluminium EGA, the world's largest premium aluminium producer, Dubai has a stranglehold on a key material for the aerospace and electric vehicle industries. In 2025, EGA's nano-oil contribution to the GDP was part of a record-breaking 77.3% nano-oil GDP share for the UAE. They are proving that you can build a global industrial powerhouse without a drop of rain or a traditional manufacturing base, provided you have the sovereign capital to buy the technology and the energy to power it. This is a massive departure from the service economy model that most Western nations adopted in the 1990s. Dubai is building a physical-digital hybrid economy where they own the software AI fintech and the hardware aluminium ports. Furthermore, the governance rule is changing. We are seeing a move toward extreme transparency in certain areas to satisfy global regulators while maintaining extreme discretion in others to protect strategic interests. The Investment Corporation of Dubai 2024 annual report was a masterclass in financial communications, showing a profit of 68 billion dirhams and a total asset base of 1.47 trillion dirhams. This level of disclosure is designed to win the trust of Western institutional investors, allowing for more. But behind those public numbers lies a sophisticated shadow portfolio of strategic assets that are managed with a 50-year time horizon. They are playing a game of financial chess, where they reveal their pieces only when the checkmate is already in place. As we look at the capital flows of 2026, we see that sustainability has been redefined from a moral obligation to a competitive advantage. Dubai's sovereign funds are not just green, they are investing in the green infrastructure of other nations. When the ICD invests in renewable energy projects across Central Asia or Africa, they aren't just looking for an ESG score. They are securing the energy rights of the future. They are positioning themselves to be the green utility for the developing world. This is the ultimate long-term play. As the world transitions away from oil, the very funds built on oil wealth will own the solar, wind, and hydrogen networks that replace it. They aren't fighting the future. They are buying it. This part of the analysis reveals that Dubai's sovereign funds have moved beyond the investment stage and into the infrastructure of everything stage. They are no longer just participants in the global market. They are the architects of the market's new physical and digital foundations. The $2.2 trillion they control is being leveraged to create a new world order where the capital of capital is the ultimate gatekeeper of global trade. The old rule said that the West provided the ideas and the East provided the labor. Dubai's new rule says that The Middle East provides the capital, the infrastructure, and the regulatory certainty that makes the whole world turn.
4. What we are seeing as we move into the deeper months of 2026 is a total shift from financial management to systemic engineering. Dubai. As sovereign funds have realized that the most valuable asset in a volatile world is not just money, it is the rules themselves. By 2026, the Dubai International Financial Center (DIFC) has successfully positioned itself as the global laboratory for AI-driven finance. With the full implementation of Regulation 10 earlier this year, Dubai became the first major jurisdiction to provide a comprehensive legal framework for higher-risk AI systems in banking and investment. This isn't just bureaucratic red tape. 2. It is a strategic regulatory fortress. While the US and EU are mired in lawsuits over data privacy and algorithmic bias, Dubai has created a clear certification-based regime that allows global funds to deploy AI with absolute legal certainty. This rule of law is the new gold standard, attracting over 500 dedicated AI companies to the Dubai AI campus, which is now projected to contribute over $320 billion to the regional economy by 2030. The Investment Corporation of Dubai, ICD, and its partners are now treating strategic autonomy as their primary investment goal. In January 2026, during the World Future Energy Summit in Abu Dhabi, it was revealed that the UAE has become the European Union's leading investment partner. 3. With mutual investments exceeding €328 billion. This is a historic reversal. The developing world is now the primary source of infrastructure capital for the developed world. Dubai's funds are no longer just buying European stocks. They are funding the EU's green transition through massive solar and hydrogen corridors. By anchoring these multi-billion euro deals, Dubai is ensuring that the future of Western energy security is inextricably linked to Middle Eastern capital. This is the interdependency rule, a strategy designed to make the UAE too essential to sanction and too integrated to ignore. This influence extends deeply into the global south, particularly through the India-UAE Investment Treaty, which was expanded in early 2026. Dubai's sovereign wealth is now fueling a $200 billion trade corridor that includes smart townships, greenfield ports, and advanced nuclear energy infrastructure in India. They are building an integrated space ecosystem and Bharat Africa Setu bridges to connect Indian MSMEs to African markets using Dubai's logistics engine. They are moving away from the Western-centric model of finance and creating a South-South economic axis, where Dubai sits as the central clearinghouse. By 2026, 61% of their capital is in hard assets, railways, ports, and power grids, because they understand that while currencies can be devalued, the physical networks that move the world's food and energy cannot. The final, and perhaps most disruptive, rule change is the tokenization of reality. In early 2026, the Dubai Land Department reported that over 60% of property transfers are now processed via blockchain-based smart contracts. The sovereign funds are the primary movers behind this. They have turned illiquid assets like a $500 million skyscraper away. $1 billion poured into real-world assets at WAs that can be traded in fragments on regulated secondary markets. This has unlocked trillions of dollars in trapped capital. For the first time, a retail investor in Singapore or London can own a 1% stake in a Dubai-funded energy grid in Africa, with dividends paid in real time. This is the democratization of sovereignty. 2. Dubai isn't just managing its own wealth, it is providing the platform for the rest of the world to manage theirs. What this all points to is a future where the traditional Western gatekeepers of finance are being bypassed. The $2.2 trillion controlled by these funds is the seed capital for a new global operating system, IB, that is neutral, high-tech, and physically grounded. The Dubai model has proven that with enough capital and a long enough timeline, you can build a sovereign moat that protects an entire nation from the boom and bust cycles of the old world. As we look at the data for the rest of 2026, The message to every investor, CEO and policymaker is clear. The center of gravity has shifted. You are no longer just watching Dubai grow. See, you are operating within a global system that Dubai's funds have helped to build. The rules of investing have been rewritten. The question is no longer whether you should have exposure to the Middle East at S, whether you can afford to be left out of the infrastructure they are building for the next century. This has been a deep dive into the $2.2 trillion masterclass of Dubai's sovereign funds. If you found this analysis valuable and want to stay ahead of the massive shifts in global wealth, make sure to subscribe to Finance Uncovered. We are committed to bringing you the facts, the data, and the real-world references that matter for your financial future. Hit that notification bell to join our community of informed investors. Now, let us know in the comments. Do you think the Dubai model is the future of global capitalism? Stay informed, stay prepared, and we will see you in the next deep dive.
What we are seeing as we move into the deeper months of 2026 is a total shift from financial management to systemic engineering. Dubai's sovereign funds have realized that the most valuable asset in a volatile world is not just money, it is the rules themselves. By 2026, the Dubai International Financial Center (DIFC) has successfully positioned itself as the global laboratory for AI-driven finance. With the full implementation of the 2026 WASP rulebooks and the expansion of the Dubai AI campus, the city has created a regulatory fortress. While the US and EU are mired in lawsuits over data privacy and algorithmic bias, Dubai has created a clear, English law-based regime that allows global funds to deploy AI with absolute legal certainty. This rule of law is the new gold standard, attracting over 500 dedicated AI companies to the region's largest AI cluster, which is now projected to contribute over $320 billion to the regional economy by 2030. The Investment Corporation of Dubai, ICD, and its partners are now treating strategic autonomy as their primary investment goal. In January 2026, the UAE government's strategic plan for 2023 to 2026 reached its final phase, emphasizing the integration of AI to advance government work and fiscal sustainability. This isn't just bureaucratic red tape. It is a strategic maneuver. By anchoring massive multi-billion-dollar deals in green hydrogen and digital infrastructure, Dubai is ensuring that the future of Western energy and data security is inextricably linked to Middle Eastern capital. This is the interdependency rule, a strategy designed to make the UAE too essential to sanction and too integrated to ignore. In early 2026, Standard Chartered raised the UAE's GDP growth forecast to 5.0%, significantly outperforming the global average of 3.4%. This resilience is driven by the sovereign fund's ability to capitalize on shifting global supply chains and a trade volume that is forecast to surpass $1 trillion this year. This influence extends deeply into the global south. Dubai's sovereign wealth is now fueling a economic axis where Dubai sits as the central clearinghouse. By 2026, the resilience through construction thesis has become the dominant investment philosophy. Sovereign funds are no longer just portfolio guardians. They are system architects. They are moving away from the Western-centric model of finance and allocating 61% of their capital to infrastructure and real estate, marking the most extensive reallocation toward hard assets in the history of modern sovereign funds. They understand that while currencies can be devalued, the physical networks that move the world's food and energy cannot. This is why the UAE has been removed from the FATF grey list and seen a 32% increase in new company registrations at the DIFC in the first half of 2025 alone. The final and perhaps most disruptive rule change is the tokenization of reality. In early 2026, the Dubai Land Department reported that over 60% of property transfers are now processed via blockchain-based smart contracts. The sovereign funds are the primary movers behind this. They have turned illiquid assets like a $500 million skyscraper or a $1 billion put. Real-world assets are WAs that can be traded in fragments on regulated secondary markets. This has unlocked trillions of dollars in trapped capital. For the first time, a retail investor can own a 1% stake in a Dubai-funded energy grid in Africa, with dividends paid in real time. This is the democratization of sovereignty Dubai isn't just managing its own wealth, it is providing the platform for the rest of the world to manage theirs. As the UAE removes many remaining barriers to foreign investment in 2026, the capital markets have become even more accessible, promising fresh opportunities for global investors to participate directly without the administrative hurdles of the past. What this all points to is a future where the traditional Western gatekeepers of finance are being bypassed. The $2.2 trillion controlled by these funds is the seed capital for a new global operating system, one that is neutral, high-tech, and physically grounded. The Dubai model has proven that with enough capital and a long enough timeline, you can build a sovereign moat that protects an entire nation from the boom and bust cycles of the old world. As we look at the data for the rest of 2026, the message to every investor, CEO, and policymaker is clear. The center of gravity has shifted. You are no longer just watching Dubai grow. You are operating within a global system that Dubai's funds have helped to build. The rules of investing have been rewritten. The question is no longer whether you should have exposure to the Middle East, it's whether you can afford to be left out of the infrastructure they are building for the next century. This has been a deep dive into the $2.2 trillion masterclass of Dubai's sovereign funds. If you found this analysis valuable and want to stay ahead of the massive shifts in global wealth, make sure to subscribe to Finance Uncovered. We are committed to bringing you the facts, the data, and the real-world references that matter for your financial future. Hit that notification bell to join our community of informed investors. And let us know in the comments. Do you think the Dubai model is the future of global capitalism? Stay informed, stay prepared, and we will see you in the next deep dive on Finance Uncovered.